Hey everybody, quick update time. So market opening mixed. The Dow is lower, Nasdaq is higher. We're still kind of in this corrective phase. A couple of announcements we saw in the daily Treasury statement yesterday that there was a 35 billion quarterly interest payment made on Friday. All right. And today is May 18th, so that means we get a Social Security payment flowing into the banking system of about 25 billion. As far as this correction that we have been seeing in May, which I'll be honest, I did not expect to see that because I was going off of last year's pattern. But we have seen this correction in May, and we get it sometimes. It's a seasonal thing, the old sell in May and go away. I spoke about that extensively in this week's issue of MMT+trader, and I explained the reason why that is going on. There's a very logical and understandable reason for it. It is not something systemic or that's going to get worse. You should read it. If you have MMT+trader, you know what I'm talking about if you've read the issue. And if you don't have it, why not? Go get yourself a free 30-day trial. Go to www.pitbulleconomics.com and click on the tab that says products and read about it. Again, I'm the only guy that does this kind of analysis with fiscal flows and MMT and puts it all together. Okay, so you can do what you want. You could look at your charts, or you could say, oh my God, it's a debt crisis in China, but all that's garbage. All right. So that's it. Oh, by the way, Treasuries. That's what I want to talk about. Some of this also might be due, and I'm talking about some of this stock weakness also might be due to irrational fears about a Fed rate hike in June. I know this is some of the talk that we're hearing now in the market that the Fed may actually go ahead at its June, I think it's the 15th and 16th meeting to hike rates. So a lot of people view that as something terrible, horrible, so bearish. I view it as a great positive because rate hikes equate to fiscal injections. They increase levels of government spending, and that flows to income of the non-government, of the private sector, in other words, through that interest channel. Okay, so I love it that people are selling because they're scared of a rate hike. And by the way, rates are still historically very low. But anything that adds to national income, and you're selling stocks based on that, I mean, you really have to have your head examined. By the way, MMT+trader advised being short Treasuries. This is probably the first time in I don't know how many years. Probably, who knows, the first time in 10 years that I advised going short Treasuries. I was never one of those guys. Treasuries are a bubble. They can't stay down. No, I mean, the Fed sets the rates. So the Fed tells you it's going to raise the rates. You go short Treasuries. So we're short Treasuries, and we're making money on that position. Okay, it's all in the MMT+trader, just like buying Apple, and Apple's up again today. Okay, that's it for this morning. See you guys later. Have a good one. Bye-bye.